After natural gas recently invalidated this upwards trend by breaking below this blue trend line, we are now witnessing it consolidate at this support level at around $3. Coinciding to that, we've actually seen that divergence happening with this upwards trend at natural gas and this downwards trend here at cumulative volume delta. And so in today's video, we discuss why this is actually currently happening and what is next for natural gas. Let's first have a look at the macroeconomics and at the fundamentals to really understand the key drivers of this commodity. And what we'd like to start with is a quite interesting chart, which is the copper to gold ratio. The copper to gold ratio has historically beautifully signaled those last few recessions that we've seen, for example here with the dot-com bubble or with the great financial crisis or also with the COVID crash. And whenever we've seen that divergence between the copper to gold ratio moving to the downside and the gold to S&P 500 ratio move to the upside, that ultimately always coincided to be a recession or lead to a recession, as you can beautifully see here in this instance with the 2008 financial crisis and also this dot-com bubble crash, right? And we've also seen it happen here with the COVID crash. And now you may ask the question, why is this such a beautiful indicator and such a beautiful signal? Well, because obviously in times of economic stress, we tend to see that gold is actually starting to outperform copper. And that historically has always happened before the recession actually started, and also before we've seen massive sell-offs here at natural gas. Historically, that ratio has actually beautifully signaled the recession or the sell-off that has been coming up in advance. And so why is the gold to S&P ratio rising then when the gold is not only outperforming copper, gold is actually outperforming nearly everything. Gold isn't only outperforming copper, this is why this ratio is actually falling. We're also seeing gold outperform the S&P 500. This is why this ratio is rising. And so this is just a beautiful indication for the economic stress that we're also currently seeing entering the system right now. We are seeing this divergence happening once again. And so we at Chronos believe that this could actually be the beginning of a deeper structural recession, of a deeper structural sell-off. Now, to add on to that, we'd like to take a look at the following indicators and have a look at it empirically, because we do believe that history is in fact always repeating concerning natural gas. We do have those past few tops marked with those orange bubbles and those orange trend lines here, and you can also see those bottoms being marked by those blue bubbles. And historically, we've seen obviously that those tops coincided to tops here at the stochastic RSI. In fact, in the last few years and decades, we've seen two tops here at the stochastic RSI. We've seen one of those two tops actually coincide to a lower high, and then the last one to a higher high that is ultimately marking the top here at natural gas. Now, historically, those tops have been coming up after we've seen a negative or a downward trend here at the gold to oil ratio. That means gold has outperformed gold prices, oil has outperformed gold prices before those tops actually occurred. Now, why is this interesting? Well, we are currently seeing this ratio going to the downside once again. Now, we've actually seen that top here in January 2026 at natural gas, that recent top, but we haven't really seen that divergence happening here with natural gas and the gold to oil ratio yet. We have seen that now recently with the war in the Gulf region, we've seen this ratio obviously fall significantly, as we are obviously seeing oil prices rise significantly. Now, this could obviously mean we could see a top still coming up here for natural gas, as historically those tops occurred after we've seen this ratio fall significantly, which didn't already happen. We have still some time to see this actually happening. We have now seen this downward trend just appear in the last few days. And so we could obviously argue from this point that a top is still coming up next here for the natural gas prices, because we have just now seen this ratio fall, and we just historically have seen those tops being in after we've already seen this ratio fall. Now, we obviously also have to keep in mind that we've already retested this upwards trend line here at this stochastic RSI, this top trend line, twice. Historically, that has actually been happening twice as well. And so from this perspective, we could obviously argue the top has been already in, since we've had this top here recently at natural gas with this massive surge on the 23rd of January. Now, those are the two theses that you can have now as Chronos, but we rather believe it's about to be the second one. We believe the top has already been in, because it seems quite unlikely that we do see 3 retests here happening, and it also seems quite likely because we are seeing that this recent low has actually been invalidated here at the stochastic RSI. It seems like we're on a downward trend right now, and also concerning the fact that we're obviously currently seeing the stock market has topped out. We're currently starting to see weakness in the stock market. And also concerning this ratio, it seems like a corrective movement, a sell-off is overdue here at natural gas. Now, obviously, in the short term, we can see price disruptions. We are currently seeing a quite volatile environment because of the war, but we've just recently actually invalidated this trend line, as we've talked about it in the intro. And we've also seen that divergence here with cumulative volume delta, and we've actually warned you about this divergence just the last like 5 or 10 videos that we've did on natural gas, because whenever you do start to see those divergences with natural gas and the cumulative volume delta, that is just always a signal that you tend to see natural gas follow the direction of cumulative volume delta, because when the bearish aggression is actually strengthening and natural gas prices are still rising, that is a signal that the buyers are basically getting absorbed, and that you tend to see a reversal as the sellers are strengthening more and more. And we've seen that trend weaken over time. We haven't really seen a high form out here recently, and now we've seen that break of structure. We've actually broken below this trend line to this $3 support. And let's put it this way, we at Chronos would not be surprised if we also see an invalidation of this $3 support, especially concerning the fact that those supply disruptions that are happening in the Middle East, they haven't really led to price disruptions in a high manner this far. We haven't really seen those price disruptions concerning natural gas as we've seen it happen for oil prices, because of the fact that we're trading American natural gas prices here. And so obviously America isn't really affected by those price disruptions or by the supply disruptions. Now, we at Chronos, as we've already told you, believe that this might have been already the top here back in January, and we could actually see a deeper market correction because of the fact that we are now seeing oil prices actually outperform gold, that we do see this negative trend here at this ratio, that we have already seen 2 tops at the stochastic RSI, that we've also seen that divergence happening with the copper to gold ratio and the gold to S&P ratio. And so all of those empirical signals are showing you that a crash might be overdue. So if you appreciated this video, don't hesitate to click the like button, subscribe, and also check out our Discord server down below. And you can also give us a nice comment down below if you have any questions or just want to give us your opinion concerning this topic. Now, thanks for your support. See you the next time. Bye bye.